This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Prices for spot crude in much of the world are rising on strong demand and a supply crunch, but in the oil futures market, worries of a recession have kept a lid on values. Oil futures could be oversold and ripe for a reversal if global demand keeps running at the current rate of about 100 million barrels per day, closing in on pre-pandemic levels. China has eased pandemic lockdowns in Beijing and Shanghai, which analysts said will further support demand and boost fuel prices as summer travel heats up in the northern hemisphere.
European Union countries' energy ministers will on Monday discuss options for how they could jointly curb gas demand, as the bloc grapples with cuts to Russian supplies and prepares for possible further supply shocks. I plan to present to ministers the concrete steps that I believe we have to make, both at member states' side and the Commission's side, to be better prepared, EU Energy Commissioner Kadri Simpson said on her arrival to the meeting of energy ministers in Luxembourg. The Commission will present an EU plan to coordinate preparations for further gas supply shocks in July.
Moving on to the top news in the energy sector.
EU energy ministers agreed on Monday on laws to save energy and promote renewables, part of a package of reforms proposed by Brussels to fight climate change by drastically reducing greenhouse gas emissions this decade. More details of the climate change proposals will be discussed at further talks on Tuesday, with some diplomats concerned that proposals such as a ban on petrol and diesel cars by 2035 could ultimately be watered down. EU energy ministers were also due to use the previously scheduled talks to discuss options to collectively reduce short-term gas demand, to cope with possible further cuts from Russia. The European Commission is preparing to present a plan next month to coordinate steps to prepare for further supply cuts amid the war in Ukraine.
The Group of Seven Club of Wealthy Nations on Monday vowed to stand with Ukraine for as long as it takes, promising to tighten the squeeze on Russia's finances with new sanctions that include a proposal to cap the price of Russian oil. The announcement came after Ukraine's President Volodymyr Zelensky, addressing G7 leaders at their summit in the Bavarian Alps via a video link, asked for weapons and air defenses to gain the upper hand in the war against Russia within months. The G7 statement aimed to signal that its members were ready to back Ukraine for the long haul, at a time when soaring inflation and energy shortages, fueled by Russia's invasion, have tested the West's sanctions resolve. Next, we have the top news in metal markets. Dalian and Singapore iron ore futures hit one-week highs on Monday, supported by hopes that Chinese steelmakers would restart dozens of blast furnaces idled due to slumping margins and weak demand to replenish inventories. Easing COVID-19 restrictions in Shanghai and scrapped or relaxed testing mandates in several Chinese cities also buoyed markets battered over the last 2 weeks amid concerns over weak demand in the world's biggest steel producer. The most traded September iron ore on China's Dalian Commodity Exchange ended daytime trade 4% higher at 775 yuan, $115.92, a ton, after earlier touching 782 yuan and 50 fen, its highest since June 20.
Gold prices steadied on Monday, helped by a weaker dollar as recession fears persisted, while investors watched for any cues on policy moves at the European Central Bank's forum in Portugal. Spot gold was flat at $1,826 per ounce by 14:10 GMT. US gold futures were little changed at $1,830.10. The dollar fell, making bullion more appealing for overseas buyers. In the short term, gold's outlook is mixed as there is great uncertainty this summer, with chances of a more aggressive Federal Reserve on one side and recession risks on the other, said Edward Moyer, senior analyst with Oanda.
We will now look at the top news in the agricultural sector.
U.S. farmers have cut back on using common weed killers, hunted for substitutes to popular fungicides and changed planting plans over persistent shortages of agricultural chemicals that threaten to trim harvests. Spraying smaller volumes of herbicides and turning to less effective fungicides increase the risk for weeds and diseases to dent crop production at a time when global grain supplies are already tight because the Ukraine war is reducing the country's exports. Interviews with more than a dozen chemical dealers, manufacturers, farmers and weed specialists showed shortages disrupted U.S. growers' production strategies and raised their costs.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.